Anmol Ganjoo. He represents GM Financials, tracks the pharma space with a magnifying glass. Anmol, good morning. Thank you for joining us. Are we in for another stellar quarter for pharma companies? Is this going to be selective, or do you think it's going to be across the board once again like Q1?
So there is going to be a lot of disparity relative to last quarter as far as operating performance of companies are concerned. But if you look at the broad trends that have existed in the market, they have, they've shown no signs of going away just yet. So if you look at vectors of operating performance for pharma companies, there are 3-4 things that will continue to surprise even in this quarter. First is the robust US demand, which has come after we saw pricing in the US turn benign for most Indian companies. We've also seen a resumption of supplies from some affected plants. And overall, we've also seen some of the supply insecurity creep in into the US buyers, therefore facilitating a secular pickup in volume. So I think these things on the export side make us confident that things should continue to hold for most of these companies. On the Indian side, there are a couple of other things that we have to be cognizant of. There are, again, multiple vectors of performance there. We've seen acute therapies record declines because as a consequence of COVID, the hygiene habits within the larger populace have improved, and therefore the demand for some segment of antibacterial drugs, etc., have come down drastically. So to that extent, I think there are multiple pockets in domestic companies where acute should not do as well, especially on a year-on-year basis, although there will be some recovery sequentially. On the chronic side, again, we have seen that the performance has been robust. Within that, also, there are interesting sub-trends where you see a lot of larger companies gain market share at the cost of some of the marginal players because of some of the promotional activities constraining the smaller companies from doing their regular promotional activities. So all in all, the trends are intact, but I think as clarity emerges, and this quarter being more of a normalized quarter relative to last quarter, you will start seeing disparate performance, and the direction will continue to be up, but obviously with clear differentiations in terms of individual companies. So that's where we are. I think nothing is going to be a negative surprise overall from a sectoral trend standpoint. But obviously, different companies will have fairly different outcomes, although directionally things continue to be same. So we are expecting a second consecutive quarter of earnings upgrades for the sector as a whole. So that's where we are.
Specifically, thank you, Anmol. Thank you for that, lovely big picture analysis. So, Anmol, my immediate follow-up question is around API companies, because the pot of gold was struck by API companies in the first quarter. Some gained largely because of supply chain, some gained because they were in the right place, right time. The uptrend what we saw, let's say in a Laurus or a DV's, do you think API companies are in for some more good days, some more good, will the good patch continue for them?
It should. So if you look at the demand drivers for most of the API companies, they are rooted in shifting of multi-year sectoral trends. If you look at 2-3 things which happened last quarter, one was that the WHO mandated stocking for a lot of drugs resulted in a lot of demand for volume-linked API companies. The second vector is that there is a massive shift as far as supplies moving away from China is concerned. Now, I know that there have been points made that China API sales haven't declined, but if you look at market shares, I think there would be a loss of market share from Chinese API to rest of the world, and India stands to benefit from that trend as it accelerates going forward. So I think API companies have indeed very good days ahead of them, because as a part of risk mitigation strategies for most of the formulation players globally, multi-country sourcing and reliance away from single source, namely China in this case, has emerged as a key operating parameter. Indian companies will indeed benefit from them. What I'm not so sure is that do Indian investors also benefit from them, because the expectations around some of the API companies, not all, have now clearly overshot and are in a zone which lend themselves to disappointments, because we have to remember that scale in API comes with reasonable capital allocations. Those capital allocations lead to subdued return ratios, and you cannot be giving the benefit of high return ratios, high multiples, and high growth at the same time. There will be clear winners, and you've named some of them, and there could be a few others as well. But I think there is a lot more reason to be cautious on individual companies in the API space, because the dynamics or the supply disruption trends are not as entrenched as you see in formulations, because there you've also contend with the fact that for last 10 years there has been a competency build-up. For last 5-6 years there's been stock underperformance and a balance sheet cleanup. So APIs, you have to be careful. I'm sure that there'll be multiple winners in the sector, but you have to look at product portfolios and where the companies are in their capex cycles.
Amit, let's get your view in as well. We also saw Glenmark, Cipla seeing growth on the back of select drugs like Remdesivir. Is this a one-off? Will it continue in the overall market as well? Acute, chronic segments. Are there particular segments you feel are going to do better?
Yeah. If you look from the chronic and acute perspective, I'm very surprised. Actually, it's going to be very tough for analysts to compare year-to-year growth next year. Actually, because the way COVID is being treated and the WHO guidance keeps coming for COVID. For me, it appears whether it would take this anti-infective section into chronic or it had to be taken into acute. So that's a different matter. However, see, the growth definitely has to come from this segment with Cipla and Glenmark taking an early lead. But when in terms of the volumes, yes, Cadila Healthcare also has ramped up its Remdesivir volumes. And that's why, we can see for at least one more quarter, sales of these molecules going high for these three companies at least.
Okay. There was a new prescription issue, Amit, earlier in the lockdown. Is that kind of done with now? And do you think that, new prescription drugs and new launches are now going to go well when it comes to the Indian market?
Yes, now the prescriptions are coming back. And, for chronic, the only sale down happened because of the pantry filling done by the patients in the rush of the lockdown. So now things are going back to normal for at least chronic therapy. Only surprise element is Alkem showing growth in acute market. So that's a good sign. Although Anmol, I'm very happy to hear from Anmol that because of our increased aseptic hygiene practices, but things must have gone down in terms of sales of antibiotics. But the performance of Alkem, at least in this acute therapy sales, is pleasing. That market is coming back to its normal.
Sure. Anmol, let's talk about what you're expecting from the Q2 earnings per se, because what we saw in Q1 was a whole lot of cost savings. Will that trend continue in Q2 too?
So Q1 saw a drastic collapse in cost structures. like some of the other sectors, travel expenses, bonus-related payments, employee expenses, etc., were cut drastically. Companies used a big axe to bring down the cost structures. Some of those costs are clearly going to come back. But we have to bear in mind that on a full year basis and also from a sustaining trend standpoint, some of the cost savings companies are going to keep with them. There are certain trends in terms of practices that companies adopt, whether it's digital marketing, whether it is publishing of scientific papers, etc., which constitute a bigger part of marketing as opposed to 2 years back. And these were existing trends. COVID-related restructuring and reorganization of certain businesses have reinforced these trends, and these trends will accelerate meaningfully, which is not to say that Q1 is representative. Some of the costs are clearly going to come back, but on a year-on-year basis, you will still see compression of costs and margin expansions for most companies. There are things which have changed with respect to incentives, travel, which the companies are not going to give back away. I think especially some of the cost savings have come with no trade-off on revenues. So companies will be trying will be putting every bit of their effort to make sure that they don't give back those cost savings away. So margin expansion on a year-on-year basis, yes, we will continue to witness. But sequentially, obviously, there will be a drop because Q1 saw a complete collapse as far as costs for most companies were concerned. But we have to bear in mind that on a year-on-year basis, for some time, we will continue to see margin expansion for most of well-run companies.
Sure. Amit, when we talk about Q1, Q1 was all about API growth. But would you say that it was a one-off because there was a lot of inventory stocking by players across the globe?
No, I would disagree here slightly. I don't think that it was largely API-led. API strength was a key factor which we saw for most of the companies. But bear in mind that API, especially for the large companies, is not a significant portion to move the needle. What was spectacular from a Q1 standpoint, however, was the fact that everything seems to have fired for most companies. API sales did well, rest of the world sales did well. Chronic also didn't disappoint as much as the initial expectations were, and costs came down dramatically. Now, all these four vectors of superlative performance leading to earning upgrades for the Q1 are going to repeat, although not in the same magnitude as we saw during the Q1. And to be fair, I don't think investors or the market also have rewarded companies proportionately yet. I think going forward, we will continue to see these trends play out, but obviously not with the same ferocity and magnitude that we saw in Q1. But it would be wrong to confuse this, what we saw in Q1, as a one-off. Yes, there were trends and exceptional factors which took things to a level where the element of positive surprise was magnified, which will come back. But I think analysts and overall street, given the fact that pharma has not been the most preferred sector for so many years, haven't gone ahead and raised their estimates as meaningfully. And the benefit of doubt that was given to companies is still reasonable. That setup, I think, lends itself to further surprises in Q2. Should these companies continue to hold trends, and there are multiple trends, not just API. API is just one part of it. Then you will continue to see sustained re-rating, sustained price performance from an investor standpoint, and most significantly, earning upgrades for most of these companies.
Right. I'm just going to get Amit there also to get to address something which we've not addressed at all. Amit, while we're talking about the trend here, I'm just going to take the clock back and talk about the US FDA issues. There is a US FDA warning letter against Shilpa, Panacea Biotech, and there is a little bit of challenge for Cipla. Nobody in the market is talking about it, but FDA letters have started coming out, and when the relaxation will start, Amit, do you think we need to be cognizant of that? Because it's not green shit for everybody. There are some units of Aurobindo Pharma where we don't know. There are some units of IPCA where we know that there is a challenge.
See, first of all, the US FDA threat on the agency reviewing our compliance seriously had never gone. I mean, it was a euphoria created that look, because of the hydroxychloroquine diplomacy that we played, probably FDA will be little harsher on our companies. It doesn't go that way with the FDA. I mean, you are seeing the vaccine play out that they are totally rigid on. So no, compliance is something where US FDA is absolutely strong, absolutely strict. And these inspections that you are hearing the news, this Silpa Medicare and Panacea Biotech, for that matter, this inspection happened in March, and suddenly, and the companies anyway were knowing that this is coming for them. I hope that they would have used this time gap lockdown to improve their compliance. Otherwise, it looks like, again, my whole concern of Indian pharma getting good in injectable manufacturing is still far, far away. Because see, it demonstrates very clearly that inspection as late as March 26th of Silpa, we have not performed aseptically well. And the way the inspection reports are written, it looks like there's no learning from this company from their other peers like Cadila Healthcare or Sun Pharma or Cipla, as you mentioned. As I'm telling you again that, as Anmol mentioned, that we probably have increased our hygiene habits. I hope these hygiene habits gets carried over to manufacturing in sterile drugs, so that at least big pharma, we do not see a lot of surprises during injectable approval.
Sure. All right, gentlemen, thanks so much for joining us this morning with your views on the current trend.